always excited to talk a little bit of crypto here on Money Talk. I think a lot of our listeners know I'm the MC for Token 2049 and some of the other big crypto events in Asia. But I'm really excited today because we got Peter Chung here today. He's the head of research at Presto Labs. Good morning, Peter.
Good morning.
Hey, and so Peter's company has just put out a big report that I assume you were master and commander of getting this report out. It's called From Chaos to Clarity, 2024 Review and 2025 Forecasts. I'm sure it does what it says on the label. And one of the things that's really created some waves is they have put out a Bitcoin price target of $210,000. Everybody was shocked when it went up to 100,000 this year. 210,000. That's another big leap, Peter. Tell us why you made this call.
Yeah, so there are a few things going on here. So, what's driving the industry is a qualitative driver, and there's also quantitative driver. Qualitative driver is I think as we all know, gradual adoption of the technology and the asset class. And I think the one metric that captures that trend well is the so-called realized value, which is it's the value of a blockchain network based on the most recent on-chain transaction prices. And it tends to, if big players in the market accumulates Bitcoin, for instance, like a BlackRock or MicroStrategy, they store it on their hard wallet and it gets reflected on the on-chain transactions. So what we do here is that we use what we call the MV-RV ratio. So MV stands for market value, RV, the realized value. And we estimated the 2025 realized value based on the recent trend, and then apply the 3.5 times the multiples to arrive at the MV part of the MVRV equation. So that's when you translate into the per Bitcoin basis, comes out to be $210,000.
Okay, that's fairly precise. And now, as you say, that's the quantitative analysis. Are there qualitative elements that may influence that up or down? I mean, like the global regulatory environment in specific countries, technological breakthroughs. I mean, are there things that could influence that from the qualitative side?
Yeah, so we try to be very conservative with our estimates. So all we've assumed is that the trend or the rate of adoption that we've been observing since January till November of 2024 to basically continue. And we think that the trend that we've seen between that period, reflected on realized value, is purely from more institutional adoption through new vehicles like ETF, for instance.
Okay.
So as long as that part continues, I think we should get to our estimate of a realized value part.
Right.
Now, any additional kicker, added bonus could come from other factors we haven't reflected. As you've mentioned, for instance, the regulatory changes. So, for instance, if the Trump decides to adopt Bitcoin strategic reserve, for instance, that could be added bonus. Or if the Fed decides to maybe loosen a little bit more than what the market currently expects, that could be added bonus. So all of that extra kicker has not been reflected on our numbers.
Has not been reflected.
Yes.
Okay, so there could be some upside to that. The name of the report, From Chaos to Clarity. That suggests regulatory environment, in particular in the United States?
That's right, yeah. So, what I try to do with that particular title is to kind of, capture the big change that's happening, moving from 2024 to 2025. And that is that, in 2024, under the Biden administration, we didn't have much of a regulatory clarity in the industry, because I think what was happening is that despite the fact that blockchain is a new technology and does not neatly fit into the existing legacy legal framework, regulators insisted that it does, and then use their discretionary to exercise their control over the industry. And often their decisions ended up being very arbitrary and capricious. Now that I think is going to change under the new administration, because I think what Trump realized is that this is a new technology, and therefore there needs to be, in order to regulate properly, based on the rule of law, you need a new laws. So there's going to be a lot of legislative work under this administration, as well as some policies that the White House can conduct on their own using the presidential powers. And there are a few things that can happen in that area as well.
Okay. So does that mean, in the United States, if you have more regulatory clarity, does that enable more institutional investors that are not yet in the game to say, all right, we could add a little bit more crypto to our portfolio? Or does it enable financial companies to provide more products for less sophisticated investors to access that they can understand to get into the crypto market? Maybe they want to put 5 to 10% of their portfolio into crypto. I mean, is it more the big players moving their treasury in, or is it more for less sophisticated retail investors to start getting into crypto?
I think it's all of it. I think so. For instance, I think the one thing that could happen immediately is, allow some financial institutions to get into the digital asset custody business, because one thing that was happening, like a good example of the arbitrary and capricious regulation by the previous the Biden administration, is that SEC put out this guideline saying that the traditional finance custodian banks cannot, in order for them to, without getting into the weeds, basically made it very difficult for them to provide the custody service for the digital assets. That decision was actually, they were trying to remove it by lawmakers, but Biden actually vetoed that decision. So I think that the guideline will likely to be repealed under Trump. Other things are things like, even without the administration, there's an accounting rule change that's likely to happen from 2025 that will make it easier for the companies to hold Bitcoin as a treasury asset, because now they will be able to, according to the new rule, they'll be able to value their Bitcoin holdings at the market rather than at the book value and taking impairment charges only when the price goes up, which is how it's been happening. That's why one of the reasons why you see like a MicroStrategy always reporting losses, because they are not allowed to mark up when the price goes up. Yeah.
Okay, so they're not marked to market; they're marked to
whatever
they buy.
It's like we buy it and then just reflected as impairment charges when the price goes down.
Okay, well, great. Well, lots to go. I would advise people to maybe go to the Presto Labs website and download the report. Lots of interesting reading there if you're going to be investing in the sector as an experienced or somebody getting into it new. Thank you very much to Peter Chung, Head of Research at Presto Labs.